Hooty hoo, all my stock market gamblers. Welcome today. It's Good Friday. Good Friday. The stock market is closed. So why am I making a video? Well, because I miss you guys. Have some extra time on my hands and we can still talk about real estate today, which we will. Now the stock market, it's still the S&P, the SPY sitting right on the 50-day moving average. Up a day, down a day, up a day, down a day. It's kind of straddling the 50-day moving average. It's very exciting to see what direction it will break. You have gaps above the 50-day, gaps below the 50-day. I think we're going to hit both of those gaps. I think maybe we go up first and then down. Well, we could go down and then up, but right now it's kind of in no man's land. We still got that tug of war going on. Now, real estate just keeps getting more and more fascinating to me. You can't make this stuff up. Now, the Federal Reserve of the Bank of Dallas, they came out with a report this week. It's fascinating. They're warning about a real estate bubble. How shocking is that? But the funny part is, now they're saying this real estate bubble, well, it was caused by speculation of investors. Well, they don't really take the blame for this. The reason we have this real estate bubble is because of their printing of money. Look at when real estate prices came down during the great financial crisis in 2008. Well, what happened? Well, the Federal Reserve, here's a couple of things they did. In 2009, they printed $3.6 trillion worth of tea to reinflate the bubble. Now, what else did they do in 2009? Well, they started buying mortgages. Why does the Federal Reserve buy mortgages? I don't think it's legal. I don't think they should be buying mortgages, but they want those mortgage rates low. They want them at 0% so that people can keep buying homes. They got to keep the bubble going because this bubble is going to pop. But now even the Federal Reserve is warning of a disaster in the housing market. They're saying, well, wait a minute. We're seeing a bubble. We're seeing a bubble has been inflated and we're starting to raise interest rates. So they're saying that there's going to be some damage. They call it collateral damage. There's going to be some people that get hurt. The people that get hurt are the ones buying houses right now. They're going to get hurt when the rates go up, and the Federal Reserve, they see this and they're warning about it, but they're the ones that cause this bubble. They say it's investor speculation. Well, the reason investors are speculating is because they're getting money for free. Investors like BlackRock and Blackstone, they get the money for free and they go out and buy houses and they rent them out and they get a 5% return. So investors have been responsible for this speculation, let's say. Now, investors, this is fascinating. Investors at the peak, which we peaked probably back late last year, let's say, they were buying about 1 out of every 3 houses that were for sale. About 33% of houses sold were sold to investors, were sold to BlackRock, Blackstone, Zillow, Open Door, and mom and pop investors too, but mostly the big corporate investors. Well, today, move a couple months forward, it's like 1 in 4 houses, of 25% of homes now are being bought by investors. Investor demand is starting to come down because they're seeing the writing on the wall also. They're seeing a disaster coming. They don't want to be the bag holder, but of course, if BlackRock or Blackstone gets in trouble, who's going to bail them out? Well, the Federal Reserve with our tax dollars. Of course, so our tax dollars will bail out BlackRock, Blackstone when the houses come crashing down. That's just normal. Right now, here's something else. Okay, so we also are seeing mortgage demand. Mortgage demand year over year down 41%. 41%. That's a lot. That's a lot. Now, what's happening, we're already in the recession, depression in the real estate industry. You see, the layoffs are already here. That's what happens during recessions. People get laid off. So there's layoffs have started to come, right? Okay, so the mortgage industry is laying people off. Now, what's also fascinating to me is that the title companies are starting to lay people off because they don't have the transactions transactions anymore. They don't have the refi transactions. They don't have the sales transactions. Sales are starting to plummet, the number of sales. The disaster's coming. The disaster's coming, and it's coming because, well, they say it's because of the speculators. But the disaster is really created by the Federal Reserve. I still say we should end them, but they keep going and they keep making all the wrong decisions. But they're going to raise interest rates. Now, are they really going to raise interest rates? Well, let's think about it. The Federal Reserve has to raise interest rates because inflation's at 11%. They're admitting that. It's really at 20%. So they have to get those interest rates up. But here's the problem. The Federal Reserve cannot raise interest rates. They cannot. Why can they not? Well, because the U.S. government will default on its debt because it won't be able to pay the higher interest rates. I mean, when you got $31 trillion in debt, every percentage point that interest rates goes up is a ton of money. And the government will default if rates keep going up. So what's going to happen? How's this going to play out? Well, it's fascinating to me. Okay, so they have to raise rates, but they can't raise them. So what's going to happen? Well, they're going to start to raise them, right? And then everything's going to crumble. The housing market's going to crumble. The stock market's going to crumble. Then what's going to happen? Well, they're going to reverse course. And they're going to lower rates. Now, maybe they get rates up 1% or 2%, but then it's going to come crashing down. The rates, the interest rates, everything's going to come crashing down. The stock market, the housing market, and the Federal Reserve is going to have to go, oh no, it's going to crash on our watch. We can't have this happen. So what are they going to do? They're going to lower rates. They're going to go, you see, maybe they get them up to 2, 3. Right now, what is the 10 years? Like at 2.8, maybe that goes up another percent. Maybe it goes up 3, 4%, right? But okay, when everything comes crashing down, you watch how quickly they lower them back to 0%. It'll go from 4% down to 0%, but everything's already going to be crashing down. So what are they going to have to do? They're actually going to probably go with negative interest rates. There are people right now in the futures markets betting that interest rates will be negative a year from now. Negative. Okay, we're at 2.8 on the 10-year. They think that will be negative. Negative. That's crazy bet, right? It could happen. Well, what would happen then? We would get this inflationary depression, let's call it. I mean, things would just inflate like crazy. I mean, if that really happens, you want to be holding gold and silver. Now, Mike, won't that just push housing prices higher? Well, nominally it might in nominal terms, but they're going to come crashing down first, and then they're just going to pump it up. But the problem is the dollar's not going to be worth anything. The loaf of bread will be $50, $100. I mean, but the Federal Reserve, they're going to have a decision to make. Do we want to help out our rich friends and keep asset prices high, and kill off the poor people because they won't be able to afford that $50 for a loaf of bread? Or do we raise the rates like we should do and kill off our rich people's assets to make everybody poor? It could go either way. I am an economist, and I'm not exactly sure how it'd play out. If I knew exactly how it'd play out, well, I could be one of the richest people in the world, I suppose. Now, what I want to talk today about is those investors. Remember, they were buying 1 out of every 3 houses. Now it's down to 1 out of every 4 houses. But I want to talk about landlords. Landlords, here's the thing. Okay, so we had this eviction moratorium, and the landlords were not allowed to evict, so people were not allowed to pay rent. Well, landlords are starting to fight back. They're starting lawsuits against the states, against the federal government for these eviction moratoriums. You see, the government does not have the right to take away the ownership from people. And that's essentially what they were doing when they had this eviction moratorium. The landlord was losing his right of ownership, his right to collect rent. So what are landlords doing? They're getting class action suits, and they're starting to sue the states for their back rent. They're starting to sue the states for their lost income. And they're going to win. They're going to win because the government overstepped their boundary. Now you say, well, tall Mike, housing is, everybody everybody needs housing, so it was the right thing to do to not, allow landlords to collect the rent. Well, look, everybody needs food too, but you can't bring a grocery cart, shopping cart into the store, fill it up, and walk out the door without paying. You can't do that. The government doesn't have a right to do that. The grocery store would be out of business within hours. I'm telling you, this was wrong what was done to the landlords. Now, I know people hate landlords and they're big bad people, but the landlords have a right to run a business. They do. They do have a right to run a business. They do have a right to collect their rent, and the government overstepped their boundary, and now the governments are getting sued in these class action suits, and I think the landlords are going to win. I think the landlords are going to get paid back, and that is going to be a hefty bill for the governments. I mean, it's going to be in the hundreds of billions of dollars, if not add on another trillion or two to our debt. Now, the other thing I want to talk about for landlords is rent control. Rent control is coming into a lot of areas. Now, the average rent has gone up 20%. In some areas, it's gone up as high as 50%. So rent control is being talked about. It's being instituted in many cities. Boston, for one, is starting rent control. Rent control. Now, rent control, people think that solves the problem. People think it really doesn't. It really doesn't. It just creates, it creates a distortion again. And when you got to let the free markets play out. You really do. I mean, the free markets can play out just fine if the Federal Reserve would just take a step back and quit printing the money. The free markets will work everything out, and we'll get back to price discovery and get rid of these distortions in the housing market, in the stock market, in the food prices. Everything is price distortion right now by how much money we printed just in the last 2 years. 5.6 trillion with the T, just in 2 years, and they're not stopping. They want this infrastructure bill. They're going to print more money. That's just what they do. Now, I love talking about this stuff with you guys. I know it's Good Friday, but I just got no one else to talk to about it. So that's why I really appreciate you. So if you appreciate me, give me that thumbs up, and I want to talk to you again next week. So punch that subscribe button and you get out there. Everybody have a great Easter, and I'll talk to you all real soon. Bye-bye now.